Hi, welcome to the Market Alert for Wednesday the 4th of January 2017. Now today's Market Alert is going to be slightly longer, and we're going to look at yesterday's session and live trades in real time. And I want to show you how powerful the 76% retracement that I spoke about in yesterday's daily chart and how you could have used this inside of the 5-minute chart. Now when this actually catches up, there's a lot of recording here, so I'm just going to try and fast forward slightly. That was too quick. Right, so what I'm doing here is I'm using the horizontal line. I've got the figure from the daily chart, which was 19,925, and what I'm doing is just coming over to here, watching the cursor, and then I put this horizontal line on the 5-minute chart. So basically I've transposed across from the daily chart where there was resistance in the market, and this is where the market stopped in the pre-market session as well. It traded through just slightly and then found resistance. So the market's waiting for the news, and I can see where it's likely to struggle now because the 76% retracement is very, very accurate and is a major resistance area, as I said last week and also in yesterday's Market Alert. So I've placed this on the chart and saved it. I should have done it a different color really, because it can be slightly confusing with this psychological line here. So it'd been better if I'd have used orange as more of a warning, but there you go. So what happens is the market trades sideways. We had a potential buy, then we're getting very close to the news and we get a sell signal come in, and you can see we're right on the high impact news here. But if you did take this trade, unfortunately the market just pipped it there. You've then got the news out, manufacturing figures, and they came out better than forecast, which is what we just saw there with that flash. Unfortunately, there's, like I say, there's a lot of data in it. It's very difficult to scrub along the actual line. Let me just see if this will do it this way. There you go. What I'm actually doing is going to type in the Forex Factory, have a look at the actual figures. I'm just getting rid of those. Then you can see there you've got 54.7 forecast at 53.7, and that's bullish for the market. So not only has it taken it short, but the news is bullish there. So I'm going to fast forward now, and all of a sudden the market drives up, as you can see there, driving up, and then takes out the trade. And then it's a case of seeing what the market does, and you can see how it stopped at that 76% again. How important this was yesterday in determining where the resistance was in the market. So let's just move forward quite a bit, because otherwise we're going to be here all morning. We don't want to do that. So the market's trading sideways, and then you'll see the sell signal come up as the market breaks the 19,900 level. So we got the sell signal. And also at this time, I'm just going to switch to crude oil, the market starts to sell off. Crude oil all of a sudden starts to move lower, and there is a relationship between the stock market and crude oil. When crude oil goes up, so does the stock market generally. It's bullish because there's more demand for it, even though it's rigged at the moment. But you can see, because it's rigged, as soon as it starts to sell off, the impact that it has, it's like the bubble bursting. So then see crude oil moving lower along with the Dow. The Dow fills the order, the market then moves lower and drives through the scalp. So at this point I remark the trade, and I'm moving the stop to break even. I've removed the actual stop price there. I'm just moving this back there, you'll see. There you go, and I've just removed that, so I know that and then change the order, and then it's a case of watching the market unfold. So it continues to move lower, and I'm looking now for the market to come down towards this level, because the crude oil market is selling off as well. I'm also checking the volume as well. I like to have a look at the volume now and again to see what it's doing. And there we see the market coming down now. Got the volume in there as well, just so I can see. And what I've done now is, because we've broken the 19,800 level, I've moved the stop 50% above here. Let me just see if I can wind this back. Say there's two ways of doing this, and one's quite fast and the other one's not. Let's just right, let's see if we can see that in real time. So there you go. You've got the 19,800 level now, which is 50%. That's 67 points profit, just under, well, just over actually, it's closer to 68. And then eventually, as we move forward, the market actually comes back, where you can see, you know, 1 point there was nearly 100 points on the table. And then if I use this one, we can see the market comes back and takes the trade out. I was hoping things were going to move further, but then crude oil found support, and there you see the trade being taken out. So the whole picture looks like this. This is yesterday's trading session, and then from the note I went out, but then we saw the market rally back as well. And no doubt they're trying to keep this market on the highs until Obama leaves. That's what it appears to be, looking at this yesterday, bringing the market back sharply, and also again wanting to get to the, there we go, the 20,000 psychological level. So I've still got that 76% retracement on the chart here, and you can see the market coming back up to the 19,900. And again, if we look at the daily chart, we're now heading back to the actual 20,000 level. They're desperate to get this into these highs, but we've got that 76% to contend with. We've also got the 62 where the market is at the moment, so it needs to drive through this as well. But I'm still convinced that they're going to have a go at the 20,000 level, so that Obama can leave, saying that the stock market made the historic high under his watch. So let's see how this pans out. Today we've got news. There's no crude oil figures. They're out tomorrow, normally out on a Wednesday, but it was a bank holiday on Monday, so they get postponed by a day. We have got FOMC minutes at 7 p.m, so this one will be interesting actually. Market could be fairly quiet in the pre-market session. It's also going to be the minutes that are released about the interest rate increase, which we know has already happened, so could be a bit of a non-starter as well. But there may be some sort of future news in there as well about what Yellen proposes to do with increasing rates down the line. And as it says here, Dow 20k disappoints for 14th day as crude crumbles, peso pounded. So this is again still the topic of conversation amongst all traders. Will the Dow get to 20,000? We've had 14 days now where it's failed to actually get to that. I can't say it's made an attempt to it, because it hasn't. Some days the market's been down, but it's the 14th day that it has been elusive to the market. But I'm sure it's going to do it. No doubts about that, because that's what they want. Run it to 20,000, sell into it, and then you've got a really safe and tight stop at those levels. The implied volatility also indicates this, down from 1181 to 1116 as well. You see this yesterday as well. So that's it for today. I say a bit lengthy, but I'd like to add in a few snippets and 20 plus years of experience of how you can actually add in a few other tweaks and see how you can use this to see where the resistance is going to be, and also how to play it. Right, that's it for today. I will see you in tomorrow's edition. If there's anything happening during today, then I will let you know. Other than that, as ever, thanks for your support and also for watching. See you in the next one.